guys talked about having a marathon, I was like, all right, this is cool. I can do this. I'm from Kenya originally, and we're known for being like good marathon runners, but I'm not of that gene. So, but this is one marathon I'm down with. So I'm definitely down for this. So this is really, really cool to have this. So to all you tackle traders, all you team tackle, all you halftime crew people, you know who you are. Thank you so much for literally spending the whole day with us. I can't believe we're doing this. I didn't even think we were going to be able to pull this off, but here we are. We have this day going on. So I'm really excited to do this. And when Tim and Matt asked me what I was going to talk about, I really went back to like when I first started trading and just that beginning phase of just opening up that brokerage account and even just figuring out how to run it, how to click buttons, how to organize stuff. So I figured it would be a really good refresher to kind of go back to that, to anybody who is brand new to trading, especially those people who are using Thinkorswim, or otherwise known as Toss, through TD Ameritrade. So I thought this would probably be a good thing to kind of go back and look at, and even as a refresher, because I'm sure some of us have been doing this for quite some time, and sometimes new updates come up or new shortcuts or stuff come up, and we have no idea where they are, where to find them. So I figured this would be a good place to start. So welcome at everybody. I'm gonna just focus really mainly on the monitor tab. I'm pretty sure, like most of you, like me, when I'm using Thinkorswim, I'm most likely gonna be using four things. I'm gonna use the monitor tab. I'm gonna be looking at the trade tab, most definitely the analyze tab, and of course the charts. But I really want to focus today's session on the monitor tab, because this is kind of like where we organize our work. This is kind of like our office space, if you look at it that way, of all our trades, where all our trades go. So it's really important to have that, this platform organized to your liking, to how you want to look at your trades, to how you want to look at your profit and losses and all those other things, and different strategies and spreads and so on and so forth. So most of you guys, when you first open up that paper trade account, everything on Thinkorswim is going to have that default setting. So you kind of have to go in there and maneuver it to the way that you want to have it, to your liking. The first thing first I want to make sure is that when I'm looking at whatever tab, whether it's the trade tab, the monitor tab, the charts, or whatever, that the look and feel of it is comfortable to my eyes. I don't want to squint my eyes. I don't want to, be like, trying to zoom in and trying to find things and I can't see anything clearly. So the first things first that most people don't maybe even know how to do, or know that this is an option, is if you go to your settings at the top and you go to application settings, you have all these different tabs. But if you go down here to where it says under general, where it says look and feel, you can actually increase your font size. So I think the default might be even small. But you can change it to whatever you want to change it to, so that you can make sure that you can see everything clearly. So I like mine at large. So when I change it, look and see how much it makes a difference. So look at the current font and size of it right now. And when I change it to large, look at how much it makes a difference. Now you can actually see the numbers properly. So that could be just something that, you could easily do to just even help you just be able to just maneuver through that platform in a much, much easier and more comfortable way, without having to squint your eyes, especially if you wear glasses or contacts like I do. Um, so that's first things first. The other thing I like to do is make sure that what I'm looking at on my monitor tab also matches what's here on my left column. So I usually like to make sure that I have a couple of watch lists set up here as well. Number one, it's what I'm currently trading, like what trades I currently have on. And then the things that I'm going to look at, if I'm going to look at the indexes or ETFs or my current watch list. And of course, everybody must have, the taco 25 on their list here. If you don't have a taco 25 list, we gotta have a conversation. So this is what I like to do, is just gonna make sure that everything is nicely and neatly organized before I get started. Now, the default on Thinkorswim is going to be this, where everything is kind of lumped in together. All the trades are just lumped into just one platform. There's no, you can't tell whether this is a covered call or a naked put or whatever. It's just all lumped in. You can, if you want to, use the settings that are already available in Thinkorswim. So if you go to this toggle right here, you can go to this tab that says arrange groups by symbol. And if you go down here and click on spreads, you then have to click all the different spreads you plan on trading. so that when you place that trade, it will actually show up as that trade. And you'll see here in just a second. So I'm just going to click all of them, even though I don't have all of these trades on. I'm just going to click on all of them so you can kind of see how they're then set apart. So once again, just look at how the current default is. Everything is just kind of lumped in together. You can't tell what trade is what, or which system you're trading. Really no way of telling. But once you click this and then you group them in this by spreads, it then breaks it down, and now it categorizes everything by whatever system you're trading. So now you can go and say, oh, okay, I know I have, an iron condor on RUT and target. I have, vertical spreads, whether it's a bull put or bear calls on Apple and PayPal. I have stock, I have single options, whether they're calls or puts, they're there. And then when so on and so forth. So you can certainly do this if you want to do it that way. I actually like to take it a step further and do it even more, where I now categorize it based on how much capital I'm going to allocate to each different system. And I'm going to show you that in just a second. But this is one of the ways that you can do it if you want to just use the simple defaults that are in Thinkorswim. You can just go in here again, just go by group by systems, and then go to spreads. I'm going to go really slow so you guys can see this again. So once again, you go to groups, group symbols by, and then you go down to spreads, and then you check every one of these boxes, and then say okay, and then it will group them by that. You also have this is under the new layout, by the way. So you make sure that you're doing this under the new layout. You also have the old layout, which I'm not going to talk much about it because Coach Tyler is coming on next to talk about portfolio design, and I'm sure he's going to talk about this tab right here. So I'm not going to focus much on this one, but we're going to focus on the new layout and how to really organize these trades. And the reason you want to do this is because you want to be able to know when you should start taking profits on your credit spreads. You just heard Cody talk about theta, right? When you're selling options and you have theta, you're making theta every single day. And there comes a time where you have to take profit on that theta. And sometimes you can wait till expiration, and sometimes you don't have to, because you want to be able to take your profits and then reuse that capital. Now, the one thing, Thinkorswim is good for so many things, but one of the things I don't understand why they don't make a default is one item, which is the net liquidation. So once you group everything on here, you'll see that it only gives you two things. It gives you three things. It gives you your buying power, how much capital you have allocated to the trade. It gives you your profit and loss for the day. It gives you your profit and loss for the length that the trade is open, but it doesn't give you what your net liquidation is or what your net value is. So you have to manually come in here and type in net lick and add it on to each of the spreads. So now you can see it's been added on there. I have to go and do that. The same thing for the vertical category as well. So that's the one thing I dislike about it. But again, it's one of those things where you just have to do it once. Once you do it, you don't have to worry about doing it again. So you kind of go in there and make sure that you add this for every one of these. And then once you add it on, you'll have it there. Same thing for your singles. And the reason you want to do this again is because you want to be able to see how much of your gains you have left to take, so to close out your trades if you choose to do so. All right, so once we have that in there, now you can go and categorize and see, okay, out of all these trades, where do I have theta that I need to take or collect and all that stuff? And we'll go through each one of these line item by line item and go through the process of how I take profit, when I take profit, or when I just close the trades or adjust the trades and so on and so forth. If it's a covered call, when I roll, the covered call and so on and so forth. So once you have your look and feel, and it's to your liking, the font size is good, everything is good, everything is set up to your liking, then you start to look and say, okay, what am I going to work on today? The way I kind of go through my day is when I go through my daily routine, and otherwise I look at, FinViz and find out what's going on in the news or whatever and so on and so forth. I then come into my account, and the first thing I want to do is manage my current trades and then add on new trades if I need to. So in this account right here, and actually before I even go on to that, one of the other questions that I always get from people is how to reset or adjust their paper trade account. It's real simple. When you log into your paper trade account, typically it defaults you when it has all accounts listed. When you do that, it's not going to give you that adjust account option. You have to individually pick which account you're looking at. And once you do that, then you'll see it brings up this adjust account right here. So in the IRA, let's say, for example, if you wanted to adjust this IRA, I'm not using the IRA for anything. There are no trades in the IRA. But if you wanted to adjust the IRA, this IRA right now is set to 50,000. You could change the amount. So let's say, for example, you're paper trading an IRA and your IRA that you actually have maybe is 25,000. Well, then I would reset this paper trade IRA to 25,000 because you want to simulate what you would actually be doing in your own IRA, like your real IRA. So you would set that to whatever amount that you want to trade with and then just hit apply. If you already have current trades on, you can just click the reset and that will take out all the trades that are currently there, and that will kind of set everything back to zero, and you can start afresh. And so that's how you adjust your paper trade back to zero or change the amount if you want to. So once again, make sure that you're not under all accounts. If you're under all accounts, that option will not be available. You have to specify which account you want to reset and then adjust it to whatever amount you want, and or you can reset all the positions if you want. But the default will always be $100,000 for each one. So going back to the margin account, so this margin account has $50,000 that we're using as our paper trade demo. So we reduced it from the original 100,000 that Thinkorswim already gives you. We reduced it to 50, but we're still on margin. So technically, because it's margin, I could still, if I wanted to use, I have access to 100,000, but we're trading it as 50. So once you do all of that, the next thing is now, okay, let's start looking at these trades and start to figure out, okay, what do I need to do in terms of adjusting? Now, when I'm doing this, I'm usually going to toggle between two different places. I'm going to toggle between the monitor tab, the charts, and the analyze tab. So if I'm going to do that, I want to make sure that my current account here is set so that when I start to toggle over to the different tabs, it kind of goes with it. And this is another thing that I want to talk to you guys or show you. Maybe you guys don't know how to change this. Again, as a default, it doesn't show the symbols when you actually open up your paper trade account. You have to go to the setup again and change this. So when you go to your watch list and you click on current positions and it brings them up with like these decimals on there, you have to go back to your application settings and you want to change it on the display. Under general, you want to go down to display and you want to check this box here at the bottom that says show underlining symbols instead of option symbols. So once you click that and you hit apply settings, it will now change these to the actual stock symbol so that now when you toggle over from one tab to the next, you're good. You also want to make sure that you have them linked as well. So if you have this in red, make sure that your other tabs are also linked in red so that as you toggle around, that they're also going to move around with it. So as I'm using this, when I'm going through the different tabs, I want to make sure that I'm just going through one by one by one. So when I start to go through each trade, I want to see, number one, is it profitable for me right now? Do I need to make any adjustments? Do I need to leave it alone? And so on and so forth. But I told you guys that I like to take my my account a little bit further by categorizing it based on how much capital I have allocated to each strategy. So check this out. I don't know if you guys know how you can do this, but if you go to, and I already have some already set up, so I'm going to click this and say show groups. And when I show it in groups, it's actually going to show you how I have them categorized. So I have a specific dollar amount categorized per strategy. Okay. So if it's covered calls, I know I'm going to allocate X amount of money to covered calls. If it's iron condors, I'm going to allocate X amount of money to iron condors. If it's speculation trades, if it's naked puts, whatever the case might be, I've actually got them categorized with the way, however much capital I want to allocate to each different strategy. how you do that is once you have a trade on, you can actually, let's see, I think I have a couple of the down here that are unallocated. I left these here for that specific reason. So here's a trade on Apple, okay? This Apple trade is unallocated. I'm going to move it to a group. Now, this is a bull put spread. So I don't have a group for bull put spreads or credit spreads. I only have one for iron condors. So I can actually now go and create another category for credit spreads and then move Apple to that category. So all you would need to do is right click and go to where it says move group. If you don't already have a group specified for it, then you would just need to add a group. Once you add the group, you can call it whatever you want to call it, right? In this case, this is going to be a bull put. I'm actually going to just call it a credit spreads or however you want to call it. But since this is a bull put, I'm going to call this a bull put spread. And once you do that, it will move it. So now you have a box for bull put spreads. Now, let's say, based on your rules or however you have your account designed, we can actually now move Apple to the bull put. Where'd it go? There we go. And you can actually, if you wanted to, if you want to put an actual dollar amount to how much you want to put to bull put so that you never go over, you can say, okay, I'm going to make sure that I have no more than 2K allocated to a specific bull put strategy, right? So once you change it, now you know, okay, bull puts, I can never go more than 2K. So if you look at now at Apple, you have a bull put on Apple and your buying power is 500. So technically you have $1,500 more to be able to apply towards another bull put spread. Same thing for PayPal. PayPal is also a bull put. So now I'm going to move it because right now it's unallocated. I don't know where it belongs. I'm going to move it to the group where it belongs. Now that we have a bull put spread category, I'm going to move it there. So now I can go and see, okay, I have this many trades on in covered calls. I have this many trades on in iron condors, this many trades on in speculation trades, and so on and so forth. And you can kind of look and see, okay, where do I need to make all my adjustments from? If you want to go back to just a simple version, you certainly can, and you can just uncheck the groups and you can just go and look at it that way. It's however, whatever works for you. For me, because I know how I trade, and then sometimes I can get really aggressive, I have to be able to look at that dollar figure so that it can tell me, okay, you can't have more than X amount in this specific strategy. So for me, I have to use this. Otherwise, I'll be all over the place. So I like to know that, okay, in iron condors, I have 5K specified to it. And right now I have 2K on the rut. I have 1K on target. My max is 3. I still have 2 more to play with. And the reason I still have 2 more is because with the rut, we're always staggering the trades on. So we're going to layer them, over time. Another trick that I learned, and I didn't know this for a while until I actually had to contact somebody from the trade desk. When you have on the same strategy, but with different expiration dates. So for example, with the rut, as you can see, we have one trade that's on the August expiration, and the other is on the September expiration. I'm going to explain this in just a little bit. When you look at the total P&L, the open, and the net liquidation, it's all lumped in together. I can't tell which trade is profitable, which one is not, because everything is lumped in together. Another trick that I learned is that if you go down here again back to the arranged positions, now you can go to arrange positions and arrange them by order. And when you do that, it now separates both of these trades. And you can see here it says Iron Condor, and there's your Iron Condor for August. And then here's the other Iron Condor for September. So now you can move over here and you can see, okay, out of the whole amount, my Iron Condor for August is profitable. I've got $85 of profit with 25 of net lick left. So now you can start to think about how you're going to adjust this trade. Well, the August one is expiring in 8 days. And this is what we talk about now, how you start to manage your trades. So for example, with this one here, with the Iron Condor, let's think about this out loud. You've got $1,000 in the trade, okay? You have 8 days to expiration. So this is now how my thought process starts to work, okay? I first go to and look at the at the amounts here, and I go, okay, I've got $85 already collected. I've got $25 remaining. I'm then going to go to the Analyze tab. I'm going to look at the risk graph. And then once you look at the risk graph, you then want to see, okay, where is it on the risk graph? So this is the visual of the rut, okay? So obviously this tells me that the rut broke out because the trade is a neutral trade and you want it to stay within a certain price range and not go above this price point. So as I'm looking at this, it's obviously threatening my bear call. My bull puts are fine. My bear calls are what are being threatened. But I've already collected 85 of 110 total credit. So there's only about 25 left to go through. The next thing I'm going to look at is now the chart to tell me what is the rut actually doing so that I can make an informed decision as to whether I should close the trade early and take profits or let it ride. So as you can see, the rut was kind of left behind all the other indexes, but now it's starting to run. And it's broken above that it broke above 15, broke above 1550, and now here we are, we're kind of consolidating, but it could continue running up all the way up to where it gets to my strike price. So I'm not going to be the dummy that sits there, and we all know about the rut. When it starts to run, it runs, right? How many of you guys trade the Iron Condor? You guys know about that. When it starts to run, it runs. So I don't want to be the one caught holding the bag saying, oh, it's only got 8 more days left. I'm just going to let it expire. And it's only $25 left. So I've already captured more than 80% of 75% of the capital. So I'm just going to actually close the trade. Now, I already have a trade, an order left or an order in the system to actually buy back at 5 cents. But with the rut already starting to inch up, I don't want to take that chance and just let the order close out itself at 5 cents. I'm just going to manually close it out. So this is now where trade management starts to come into play as to what do you want to do with those trades. Does that make sense? And I know the chats are delayed, so I'm assuming that you guys are hearing that and you're seeing that. So with this trade right here, what I would actually do is just go into the market. If the market was open, I'd just go into the market and put a trade on to buy it. I'm actually going to go in and I'm going to put a trade. I'm going to put an order to buy it tomorrow when the market opens at 25 cents. So I'm going to cancel the one that I already have pending because I already have one already here, the one for August to buy it back at 5 cents. So I'm just going to make this adjustment and I'm just going to say now buy it tomorrow at the market open for 25 cents because I don't want to deal with this. I already have most of my premium. I don't need to worry about this. And I'm just going to let it go. And tomorrow morning when the market opens, order will fill. If not, I'll go in there and adjust it. But that's how you start to slowly start to manage your trades. And now I want to use that capital for something else, right? Because we know we're going to be putting on the Iron Condor again in about, is it this week or is it next week that we're putting on the October? I think it's this week that we have the cash flow condors, or maybe it's next week. But when we know that we're going to be applying that to the next one. So now my $1,000 is going to be available. And I'm going to use that same $1,000 that I had on this trade once it closes tomorrow to apply to the next one. And then as this one expires, I'm going to use it to the next one. So it's all about recycling your capital over and over and over and over again. So that's how I like to organize my trade so that I can go through line item by line item to make sure that I have everything in play. So if we start with the first trade here, we have the covered call. So I'm actually going to, let's see here. So this is the cover call that we have on S&P 500. So this account, the way I look at this account, or the way we started this account, was for somebody who is completely brand new into trading, has capital that they had in their account that was probably maybe in mutual funds or other types of other funds that really were not generating enough cash flow. And so the premise was, while they were learning how to trade, or while this person is learning how to trade, we're going to put the most basic system that they can take and apply over time that will generate cash flow over time in the covered call system. And then rather than go and actually pick individual companies, because again, we were assuming that this student is completely brand new, does not have the necessary education quite yet to go in and analyze companies and find out about their fundamentals and PE ratios and all these things that go into picking, good value stocks, we were just going to put it in the S&P. So that was the original premise of this, of starting this paper trade. So first things first, we're going to allocate majority of our capital into a cover call strategy in the S&P. In addition to that, we want to make sure that we don't have to worry about this account over time when we're going through, elections or whatever the case might be. So immediately after we bought the shares, we then went and bought a protective put for the S&P shares, okay? And then we also sold cover calls. So every single month, what we've been doing with this account is selling call options every single month for cash flow. And we have a protective put all the way out to January 2021 because we wanted to go past the election and not have to worry about it at all, and make sure that we just have everything covered. So regardless of what happens with the S&P 500, it could go to zero, but we know we have a floor. We have a cap as to how much we could possibly lose in that trade because we have a put option on it. Now, a savvy investor, might choose to have the insurance on and off whenever they see the market having volatility on. But again, the premise is that this was a brand new trader. They wanted to be able to sleep at night and not have to worry about it. So to them, the premium, the cost for the insurance is not a big deal to them because again, it's a just in case. So if the value of the insurance premium is actually decaying over time, that means the stock is actually going up, which is what you want anyway. So even through the whole entire volatility of the virus and everything else that we experienced in February and March, you can see that the S&P has recovered back because we bought it back, I believe it was like in the beginning of the year at 325. And here we are back above those price levels and actually profiting on the stock itself. So every single month, all we do is just make adjustments on the covered call. And on the put option, if we decide we want to add more insurance or add more time to the insurance, as this option starts to get closer to expiration, like Cody talked about, we're going to roll this put option and buy more time so that we have longer protection as we get closer to the expiration before that time decay really starts to hit. So with this contract right here, so I'm just going to focus on the covered call primarily, not on the put option of it. But here we are. We sold. We just sold the cover call a couple of days ago. So this is still in the beginning stages of it. There's nothing to manage here other than the fact that we sold a 341 call option. The S&P is sitting at 337. So we still have some ways before it gets there until September. So the only thing I'll need to do here is just keep an eye on this and manage it and roll it out, adjust it if I need to as the S&P continues to go up. But it's usually a toggle between this screen right here and the charts to see where that strike price is, and making a decision as to whether you need to adjust your trade, close out your trade, or whatever the case might be. But because this position here is an investment, I'm not concerned about it. All I'm going to do is just roll that call option before expiration. And the next one, we talked about the RUT. So the RUT, we talked about that one. So the other one that we have on here is Target. Now, Target, I specifically left on here to kind of show you guys why it's important to make manual adjustments and take profit when you have the chance to, because you just never know. And it always comes down to that greed factor, right? We always want to just squeeze to just take another $1 more, or $2 more, or $5 more, and then it ends up biting you biting you in the behind. So on Target, this was an ion condor on Target. Now, like the RUT, I had an order already placed to buy it back at 5 cents, and I and close out the trade. However, last week, and I also have alerts on the stocks when they start to go above certain resistance levels and break below certain support levels. So as you can see, Target was a very well-behaved stock for an ion condor because you just want it to be neutral. And I had an alert to let me know when it got above that 130 price, because I knew that once it violated that, it was probably going to have a run up. So technically, I would have closed out this trade on Friday, but when we talked about what I was going to teach, I wanted to leave it on to show you guys what happens when you don't manually close the trades. So as of Friday, I'm just going to close out this trade so you guys can see this. So as of Friday, the trade was profitable. I think there was probably about $75 or $85 already collected in premium from the trade as of Friday before it broke out. But once it broke out, you can see it broke out of 130 and it's been ripping ever since. So now look at the visual and look at the picture of Target. So here's the iron condor. It was profitable inside the 130 price point. It broke above the 130 and now here we are. It's slightly at a negative. I'm down about $14, call it $15. So now when it comes to managing iron condors, we know that once it breaks above that strike price, that 140 call, because that's where you start to see your losses because it's broken above it. That's where your loss is kicking. So here are your strike prices, right? So we have no threat to the downside whatsoever, but we are starting to threaten up against that 140 price point. So now the question is, I'm going to ask you guys this question. You have 9 days left in the trade. Okay, you have 9 days left in the trade. You could stick it out and hope and pray to the iron condor gods that it does not break above 140 and that you get to keep the entire premium of 138 so you keep it through expiration. Or you can just say, you know what, Target didn't work out for me. It broke above. I'm down $10. I can close the trade now, get my capital back because I do have $1,000 in this trade. I can get my capital back and live to trade another day and find something else to do. I'm going to ask you guys in the question. So type it in the chat. What would you do? Do you keep it on? You have 9 days left. Do you keep it on and try to squeeze out and try to cheat your way and hope to pray that you get to keep some premium, or do you just close out the trade? Seth says close out the trade. Yep, use the money for another. Yep, nice. You'd close. Right. And this is where like it starts to get into your head because you're like, oh my God, I'm so close to expiration. It's only 9 days left. If it doesn't go above 140, I get to keep the whole, I get to keep the whole premium. But you just never know, right? Any news can come out on Target, and once we know, and like Noah said, once stocks start to break out and give you new highs, right? It just gave us a new high today. So what's the likelihood that's going to happen? It's going to continue to rip up. So do you want to be that person? And I wanted to say dummy because I am the dummy. Do you want to be that dummy that will sit there and watch it go and actually turn what could be a small loss into a much, much bigger loss? Absolutely not. So you just close a trade and live to trade another day. So hypothetically, this trade, I would have been out of this trade on Friday because this is where I had my alert to get out of the trade anyway when it broke above the 130. But I left it on just to show it as an example for you guys as to how we start to manage these trades and how, when you tell yourself one thing, something else happens and then, the company just rips and you end up having a much bigger loss than you would have had you just closed the trade out. So tomorrow, again, when the market opens, I'm going to put an order just to buy it back, take a small $10 loss as opposed to taking a completely much, much bigger loss should Target actually go and violate that 140 strike price. So I still, I can still live to trade another day. Does that make sense? Yeah, I could roll it up, but I have had it on for like almost 45 days. So I'm sick and tired. I'm just mad that it decided to run up right before expiration. So now I'm just hating on Target because it was behaving so well. Now I'm just like, I'm done with you, Target. I'll see you another time. You're on timeout for now. All right, so the next one that we have is, let's see, do we have anything on speculation? So DocuSign. All right, so here's another example on DocuSign. And I actually did a video, and I apologize ahead of time for all you guys who were trading DocuSign. And I did a video on it last week on it writing on the 9 EMA. And then this week it decides to just violate that whole thing. So my apologies in advance for that. So DocuSign actually started off as a speculation trade. Then I turned it into a broken wing butterfly turned into a credit spread because I was doing some repairs along the way. So here's DocuSign, and if we put on DocuSign here, I believe we put the trade on as it closed above this 9 EMA. And I think when I did the video was somewhere last week, and we talked about once it broke above this level right here to make sure that you move up your stop. So hopefully whoever was in DocuSign, moved up their stop, took profit, took some off the table, because this is exactly what happened after it broke that 9 EMA. It validated and it's just been coming down. Now it's coming back down to this old support level right here, and slowing down. We had a small doji candle here today, so hopefully we start to see a reversal pattern here, but it could also be forming a head and shoulders. So I don't know if you guys are seeing that. So until it goes back above the 9 EMA, I'm not trading DocuSign on a bullish trend. So the trade started off as a bullish trade with just a call option, turned into a broken wing butterfly, turned into a credit spread. So it's moved around. So now it's a credit spread, turned it into somewhat profitable trade today. And so now the question is, do I take profit, or do I still have enough time? So if I look at the Analyze tab here, and I now look at DocuSign, let's make sure we don't have all these other things checked here. Let's just look at the actual trade itself. Where are you, DocuSign? Oh, did it close out on my trade today? Wait a minute. Oh, maybe I did close out the trade. Oh, the trade. Okay, the trade is closed. I thought I had a trade on DocuSign, but maybe not. Let's see. There's a trade on DocuSign. Let's go. Let's see. Analyze. Show all. Yeah, so this is a trade on DocuSign right now. So it's now a credit spread, and we're just going to hold on to that and take profits at some point. But because it's in a bearish trend, it was bullish turned bearish. I'm going to keep an eye on it and then take profit on DocuSign at some point. And then the other one that we have on are naked puts. So if I go to the naked puts, we have naked puts on Newmont and SLV. So Newmont, once again, I've been trying to get assigned on Newmont forever, but it keeps going up. So the naked puts that I have on Newmont right now are the 60 puts. And right now, Newmont is trading at 63. So once again, how I make my decisions as to what I want. And now again, this is a naked put. It's a boomerang trade, so I don't mind if I do get assigned a trade. So for this one here, I'm not going to exit the trade. If I get assigned, I get assigned. If I don't get assigned, I don't get assigned. I'm just going to keep doing naked put. So that's kind of like the trade with Newmont Mining. So right now I've got the 60s. It went up today, but I think it was up today. Let's look at Newmont. So once again, we want to look at Newmont. So Newmont was down today, it gapped down yesterday actually. And if I look at the Analyze tab on Newmont, we have the 60. Where's Newmont? So here's the Analyze, here's the tab, the trade on Newmont. So I'm one strike, I'm 6 points. It's sitting at 63. It's I have the 60 put. So if it goes in the money, I will be assigned. I do have to own Newmont at 60, but I'm willing to take on that assignment. And this is where my break even is on Newmont. So actually, no, that's not it. Wait a minute. Let's go back here. Newmont. Dun, dun, dun. And let's go to Analyze risk profile. So here's that. And then if I look at the risk profile there on Newmont, wait a second. Where is my Newmont trade? Dun, 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 dun. Let's go there. Build orders. Analyze trade. So here's that. So here's Newmont. I'm down about $125 on Newmont, but my break even is down here at 59.08. So I still got a ways to go. I'm not going to worry about managing it because I actually want to take assignment on Newmont. So if it does get to 60, good. I have the capital available to buy Newmont, so that's going to be that. Silver, same thing. Naked puts on silver, looking to get assigned at 20. It's sitting at 23. So once again, you go look at the charts with silver. And here's silver. Again, we had that breakdown of yesterday and today, but it's still well a ways from where my strike price is. Looking to take assignment on it. If it doesn't, I'll just keep the cash flow. So no adjusting needed here. So the only adjustments that I've had to do today will be on the RUT for the August and on target, and just take the small loss so that I don't have to worry about it, taking a much bigger loss. And then PayPal, Apple and PayPal. So Apple, I have a bull put spread on it today, just fairly new into the trade, so we still got a ways to go. Looking at the chart of Apple, still got a ways to go from that break even. Had a nice green candle today. Now this, I'm not looking to take on assignment, but it's above the 9 EMA, so I'm just going to continue writing this. But once it gets to how you start to look at the adjustment of the trade is like, okay, so you come up with whatever rule is. Usually I go 75% or 80% of the net lick, I'll take profit. So once again, we're still quite a ways from that since it's a fairly new trade that we just put on. But I'll keep looking at the account statement every single day to look at the trade and decide when to take profit, because I want to be able to recycle that same capital to put onto another trade. PayPal, it's the same exact thing. If we look at PayPal, we have, so let's see, I think the strike price we sold, let's go to PayPal here. And this is the one that we had. So here's PayPal. Let's make sure we have that one checked. So there's PayPal. There's the risk graph. There's your break even point. Down slightly a little bit, but nothing to be too concerned about. It's still quite a ways before it touches my strike price. And it'll be the same thing. I'm down 51, gained a little bit of that back again today, but again, still quite a ways, still got a ways to go. 37 days left in the trade on PayPal, 37 days left in the trade on Apple. We've got silver that's got 23 days left in the trade. Newmont's got 23 days left in the trade. So really Target is the only one out of all of them, Target and the RUT, that are closer to expiration in terms of, I don't want to take the chance when it's this close to expiration for it to continue to rip up and then I end up turning what was profitable into a losing trade, or what was slightly a small loss into a much bigger loss. So hopefully you guys learned a little bit on how to manage your monitor tab here, how to organize your trades. If you want to use the default with Thinkorswim, you certainly can. If you want to categorize it to how you want to allocate the capital per strategy, per trade, you can do it that way as well. Make sure that you have your look and feel to, comfortable to your viewing, get those font sizes the proper way. Make sure that you have the symbols here lined up so that you can actually see what they're doing here, your watch list and all that other good stuff.